Fine Organic Industries is into the business of oleochemical additives, eco-friendly with a very strong bottom line. Fine Organic Industries, a growth story, registering improvement in revenue and EBITDA consecutively, and in Q4 FY22, good revenue growth and EBITDA percentage takes the price beyond 6,000 rupees. And the best was Q1 of FY23, growing EBITDA. Price reaches 52-week high of 7,326, but weakening of EBITDA in the very next quarter causes a crash in the share price. And when the revenue growth in the ensuing quarter was almost half of the previous quarter and there was a weakening of EBITDA further, the price collapse continues, giving away the price gains of earlier quarters. All along, it is the EBITDA that mattered, and when it became weak, the company lost in share price. The share price of Fine Organics as on date is at a discount of almost 40% to the peak of 7,329, while the current price appears at above the 20 EMA, but there is no enough quantity supporting the upward movement of price, and therefore one has to await 200 EMA crossover with volumes for a positive upward movement. The performance of Q3, which caused the price fall, was the result of rising material cost, falling realization per unit, weaker margin, and sequentially negative growth. Q3 element-wise is quite interesting. In December 2021 quarter, EBITDA was 17.2%. 6 months after that, in June quarter, material falls by 10% and EBITDA goes up by 10%. 6 months hence, Q3, 10% increase in material cost. There is a bit of saving in employee expenses and also in other expenses, but the damage is done. EBITDA is down almost 8%, and that brings down the share price. Also because the absolute EBITDA of 159 crores achieved in Q3 is almost similar to that 3 quarters ago, and that was a matter of concern. Market was upset. All damage done by rising input costs. Company's cash flow up to 30th September 2022 indicates strong operational cash flow and also heavy movement into current assets, nominal fixed assets, minuscule dividend, and operational surplus, which turns into negative in the latest 6 months. Concern is a major part of operational cash flow has gone into building inventory and debtors, and more particularly during September half year, almost the whole amount has gone into additional inventory and debtors. This is quite evident from the increasing inventory days and also rising debtor days. In the process, working capital demands have hurt the company, but what went wrong during Q3 and the subsequent quarter can be known only when we have the cash flow for the full year ending 31st March 23. Till such time, the real reasons for Q3 collapse remain under wraps. From a sectoral perspective, Fine Organics had a movement of PE multiple, and there was UPL which had its movement. Other peers, PI Industries, mirrored Fine Organics, and Sumitomo and Bayer Crop Science were no exception. Seen over a period of 4 years, first, second, and third year saw an upward movement of PE multiple, with Fine Organics peaking at 81 PE in December 2021, and the steep collapse was seen across the sector during FY23. And to be fair to Fine Organic, it appears to be an issue with sectoral underperformance. To the credit of Fine Organics as an oleochemical additive manufacturer, a pioneer in the country, well known across the globe for its quality and research, starting with food emulsifiers, today a wide range of products of plant-derived additives, testimony to the strength of Fine Organics' capacity of over 111,000 tons per annum, almost 100% utilization, more than half exported, and presence across the globe in over 75 countries. The unique strength of Fine Organics is its customer profile with FMCG global players and plastic processors. With the spread in customer base, lower risk of concentration, and the clientele are who is who of the best in the industry. Fine Organics is unique for its competitive edge as the technology is complex and is capital intensive. New players find it difficult as there are stringent regulations and approval processes are quite long and protracted. That creates a strong moat in favor of Fine Organics. Fine Organics indicates commitment of promoters in terms of holding. They offloaded 25% under offer for sale in 2018. Balance 75% unpledged stays with promoters. Mutual funds have been raising their stake while FPIs have marginally reduced, but the share with public is quite limited and the float thin. Behind the fundamentals of Fine Organics is its impressive volume growth year after year, significant amount of flowback with minimal dividends, and impressive return on capital employed and return on equity, along with strong operating leverage in cost control and profit optimization. Company's immediate challenges on hand: rising prices of inputs, palm oil and edible oil, freight and transportation costing more, pressures on margin, and the delay in implementation of the Greenfield project of Gujarat. The success of Fine Organics has been using its global reach, operating leverage, and strong flowback in overcoming the challenges posed by input inflation and working capital buildup. Hope this presentation was up to your expectations. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares, and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.